Good morning. My name is Miguel Delgado Helleseter. I'm an assistant professor of economics at Cal State Channel Islands. I'm also currently the director of the Institute for Global Economic Research, and I'm a home board member. I think we may be having some technical issues. I do want to thank Dr. Myers for his presentation. It seems like the timing may be a little bit off, and so my apologies for any issues there. But hopefully you were able to watch through the end of the presentation. Last year, I got to present with some of my students some of the work that we did looking at housing in Ventura County. I really want to thank Home for allowing us the opportunity to do this again this year. Now, as you can imagine, we are working remotely, essentially. And so I haven't really met my students in person, right? Everything we've done has been remotely. So in the interest of avoiding as many glitches as possible, we decided to record our presentation. So I will be playing a presentation mostly by my students and some of it by me, where we look at some issues of housing in Ventura County that will hopefully complement some of what we just heard from Dr. Myers. And so I know time is tight, so I will play that presentation for you now. Hello, my name is Miguel Delgado Helleseter. I'm an assistant professor of economics at the Martin B. Smith School of Business and Economics at California State University, Channel Islands, the only four-year public university in Ventura County. I am currently also as well the director of the Institute for Global Economic Research. With generous funding from the Smith family, I get to work with a small group of students doing what economists love to do, playing with data and looking for interesting stories to tell with that data. Today, three of my students, Alejandra Aguirre, Hunter Bilby, and Marlon Velasco, all seniors majoring in economics, will be presenting some work that we did together, looking at the housing demand and the housing supply in Ventura County. Each of them will present one of these sections outlined here, and then I will conclude with a fourth section in which I will offer some general remarks and look at some of the impacts of COVID-19 on housing in the area.
Hi, my name is Hunter Bilby, and I am a senior economics student at CSU Channel Islands. I have lived in Ventura County for over 7 years now. After graduating, I hope to find a career in data analysis or banking. Today, I will be discussing the housing demand. On our first slide, we have data from the United States Census Bureau of the 10 counties with the highest inflow of migration into Ventura County in the 5-year span of 2014 to 2018. The leading county comes from our neighbors in Los Angeles County, with over 8,000 people moving to the area. All 10 of these counties are located in California. Santa Barbara and San Diego are in second and third, but are still quite behind Los Angeles. On this slide, we see the highest 10 counties of which Ventura County residents are moving to in the same time period. Once again, Los Angeles County is receiving the most amount of our previous residents. However, on this graph, two of the counties with high-end outflows are not located in California. That is Maricopa County, Arizona, and Clark County, Nevada. Here, we see the net migration between Ventura County and the top 10 domestic areas. From 2014 to 2018, we see that more people are leaving Ventura than coming to it. Los Angeles, Santa Barbara County, and San Diego County are the only ones with inflow from their area. The rest of the counties are outflow, and we are losing people to these counties. Moving on from migration, we can take a look at the population growth of both California and Ventura County from the California Department of Finance. We created a population index, making our starting year of 2000 and setting it equal to 100%. Since then, California's population has risen nearly 20%, while Ventura County's has risen by only 20% and seems to be plateauing in the last 20 years. On this slide, we see the graphs of California's homeless population and Ventura County's homeless population. Ours is consistently below the state average, disproving the contrary belief of the county's high homeless count. This information was found on the United States Interagency Council of Homelessness. Similarly, on this graph, we see Ventura County's population percentage and our homeless population percentage of the state. Ventura County's population percentage seems to be slightly lowering, but hovers just around the 2% mark. But our homeless population has been changing frequently, but is still consistently below the population percentage of our county. The biggest takeaways of the housing demand in Ventura County are more people are leaving Ventura County than are arriving in Ventura County. We have a very slow population growth compared to the state. And homelessness is lower than the general perception counts it to be.
Hello, my name is Marlon Velasco. I am a senior here at Channel Islands University, and my major is economics. I currently work in finance management in Ventura County, and my goal once I graduate is to land a career where I can apply what I've learned. Today in our presentation, I'll be going over housing supply. Building permits are directly correlated with construction. In this slide, we observe the amount of permits issued for single and multifamily structures for the last 40 years in Ventura County. Building and land development was at its peak during the mid and late 1980s. However, before that, there was a significant decrease in building permits being issued, with interest rates rising higher and higher from 1980 to 1982. Many potential buyers were forced to drop out of the market simply because interest rates were too high to be able to afford purchasing a home. After the slowdown in land development at the beginning of the decade, we see an uptick in building permits from 1983 to 1989. During these years, we see financial systems being deregulated, which made credit easy to come by. Combined with an increase in consumer spending, the demands for homes skyrocketed, since buyers were now willing and able to finance a home. In the early 1990s, we see again a decrease in permits being pulled. The decrease in construction coincides with an economy slowing down in the beginning of the 90s. However, in 94, you see a resurgence in building permits issued for land development. The upward trend of permits being pulled for land development and continues, and even rivals that of single-family unit structures of the 1980s. Up until the years approaching the Great Recession in 2008, where we see permits issued come to an all-time low in 2009 and 2010. Slowly, we can observe a recovery in the number of units being built after 2010, albeit at a slower rate due to the increased regulation on financial systems, making the growth steady but slow. In this slide, we can see that the development in Ventura County was occurring more on the east end of the county in the 1980s in cities like Simi Valley and Moore Park. You can observe the change when compared to 2010. The majority of permits being issued now has shifted over to the west end of the county to cities like Camarillo, Oxnard, Ventura. However, still in an overall downward trend. So on this graph, we're able to analyze the building permit slowdown of the 2010s when compared to the 2000s. You can clearly see the dramatic decrease in permits being issued pre-recession and post-recession for every city in Ventura County across the board, both single and multi-unit structures. On this slide, we're able to see the growth of housing units from 2010 to 2018. Here, we can clearly see a slow, static upward trend compared to that of previous decades. Also, we see the vacancies throughout Ventura County have fluctuated to produce a very slow growth rate of vacancies available to those looking to move to Ventura County or those looking to move within Ventura County. On this final slide, we can take a closer look at 2010 to 2018 vacancy growth. We see that the largest types of housing that contribute to the growth of vacancies in Ventura County are the following: units that are available for sale or rent, units exclusively for sale only, and units for recreational and seasonal rentals. Recreational and seasonal rentals, aka short-term rentals, make up the largest type of vacancies of the three. Ventura County beach communities make it a popular and affordable option for leisure and vacation. And with services like Airbnb, Vrbo, making short-term rentals easier to fill and more profitable, There's an incentive for property investors to increase the amount of vacancies available in the summer as well as year-round. You see the significant decrease in the short-term rental vacancies in 2018 due to regulations, but still maintains to make up a sizable portion of housing vacancies in Ventura County. In conclusion, to summarize building supply in Ventura County, we first observed the fluctuations and overall downward trend in housing development from the 1980s to today. We also see the shift in composition of housing stock from single-family units to more multifamily units in the 2000s and 2010s, along with growth shifting from east end of the county to the west end of the county. And lastly, we observed the increase in vacancies related to popular short-term rentals.
Hello, I'm Alejandro Aguirre, and I am a senior at Channel Islands. I live in San Diego, California, and when I earned my degree in economics, I plan to work in data analysis. Today, I'll be speaking about the housing balance in Ventura County. Here we can see the median list price in blue and the median sale price in orange from the time of 2005 until 2019. And these two values have remained very close together, meaning that housing units in Ventura are not overpriced and that they are being sold very close to their asking price. The absorption rate is a term used in real estate to express the rate at which homes are selling in a specific area. And generally, a market is considered a seller's market if the rate is below 6 months. What we see in Ventura County is that just before the housing market crash and through the worst part of the Great Recession, the market was, for the most part, characterized as a buyer's market. Since the start of 2012, the market became a seller's market and has remained with absorption rates well below the 6 months. This suggests that demand growth outpaces supply growth. We can look at the interest rates to understand partially why demand remains strong. Over the last 50 years or so, mortgage rates have generally trended downward. One way to think about what this means is to consider the cost per dollar financed when purchasing a home. In 2007, for every dollar borrowed on a 30-year fixed rate mortgage, a buyer could expect to pay over the life of the mortgage about $1.60 in interest. A $400,000 home financed in 2007 would therefore end up costing the buyer about $1 million over the 30 years. In contrast, by the end of 2019, for every dollar borrowed on a 30-year fixed rate mortgage, a buyer could expect to pay over the life of the mortgage about 60 cents in interest. A $400,000 home financed in 2019 would therefore end up costing the buyer about $650,000 over the 30 years. This significant difference in financing costs can be a strong incentive for buyers. We can also look at indicators for the rental market in Ventura County. We look at two indicators, average days on the market and the median rent. And we index both measures back to October 2005 so that we can compare the trajectories. We can see clearly that average days on the market were quite higher during the Great Recession than they were in the years before that. During that time, median rents remained fairly flat or even dropped in some months. This trend reversed by the end of 2010, and in spite of the seasonal patterns in the data, we can see that average days on the market returned, on average, to pre-recession levels by 2011. By 2013, we see median rents start rising, and by the end of 2019, the median rent was about 45% higher than back in late 2005. Considering that this uptick started in 2013, that translates to an average increase in the median rents of about 7.5% per year. So to give a summary of housing balance in Ventura, there is very slow population growth and slow growth in housing stock. demand for housing in Ventura has remained strong, and this is in part fueled by low mortgage rates. There is a rising popularity of short-term rental service, like Airbnb. This may have increased the demand for housing as an investment, but it created a reduced housing stock for long-term occupancy. The prices of rents have continued to rise in what has remained essentially a seller's market. Thank you very much.
We've all been impacted by COVID-19. Quick responses by our local government and health officials allowed our county to avoid some of the larger spikes that some of our neighbor counties experienced, and we did fairly better than much of the state of California. As of September, which is the last complete month of data we have, we were averaging per month about 200 new cases per 100,000 people. I am cautiously optimistic that with the lessons that we've learned, and in spite of expecting additional waves, that we will be better equipped to handle both the health and the economic impact of this pandemic. I imagine we're all aware of the historic unemployment rates we experienced over the spring and summer. In fact, our unemployment rate now is still about 3 times as high as what it was at the beginning of this year. As it is often the case, the economic impacts of this pandemic are disproportionately higher on the most vulnerable. We have particular sectors in our economy, such as leisure and hospitality, that have taken a much bigger hit on employment than this picture suggests. And unfortunately, many workers in those sectors tend to have earnings that are toward the lower end. As it relates to housing, I think some important questions remain as to what is going to happen when moratorium evictions are lifted, particularly if those jobs have not returned. What will these people do? We learned earlier that permitting activity for new residential construction in the county had been trending upward in the last few years, although at a slow rate. Here, we compare the average permits per month for the last 5 years to permits per month this year. What you can see is that January was suggesting that we were going to have a promising month in terms of new development. COVID-19, of course, had other plans for us, and what we see is that permitting activity has pretty much stopped altogether. We see a little bit of pickup in June and July, but July is the only one where we see above previous trend. This, of course, does not bode well for new development in the future. On the flip side, we have seen the resilience in our county before. We have seen permitting activity pick up after the worst of the recessions. We'd like to conclude with this figure, which to a large extent summarizes our finding about housing in Ventura County, both pre-COVID as well as during these pandemic months. In this figure, we've indexed the number of real estate indicators back to January of 2017 so that we could look at the trajectory of all 3 variables at the same time. That would be the absorption rate, the number of listings that were sold, and the median sales price of a home. Historically low interest rates, the natural features of our area, and the rise in popularity of services such as Airbnb that allow renting out second homes have all contributed to keeping demand for housing fairly strong in Ventura County. At the same time, relatively slow development of new housing in the county has not allowed supply to keep up with the increases in demand. And this ultimately puts upward pressure on both the cost of housing for purchases as well as rents. This, combined with low wage growth in the county, means that working in the place that you call home is becoming increasingly difficult to do in Ventura County. We've indicated on this figure the months of September for the last 4 years to highlight the effects of COVID-19. What you can see in 2017 through 2019 in the month of September is that the month of September tends to be a month in which the number of listings declines, the median sale price doesn't move a whole lot, and the absorption rate is actually fairly high. What you can see on the right end of the figure is that by September 2020, our median sale price is about 15 percentage points higher than it was just a year ago. that is well above inflation in the area. Our absorption rate is below 2.5 months. That means homes are moving fairly quickly. And if you look at the number of sold listings, we are close to as many listings being sold as any time in the last 4 years. So the impact of COVID-19 seems to have been that it exacerbated some of the trends that we were already seeing of housing in Ventura County becoming less and less affordable. Thank you.